Bitcoin is scarce desirable property, and I intend to hold it forever. For the rest of my life, I'm not a speculator. And what I've also said is if you're in a collapsing currency environment, you should have negative working capital. You're better off to have debt than to have equity. And what's happened in the past 2 years is currencies have collapsed. You were better to have debt than equity. When I told people that I like mortgages, the mortgage rate was 2.7%. Mortgage rates nearly doubled. And if you had a chance to take a mortgage at 2.8% and you waited till the mortgage rates went to 5.2%, the cost of your home just went up by 80%. So paying off your home with cash is probably not a good idea when mortgage rates are cheap. Holding cash that's losing 20% of its value is not a good idea. That the blue dollar rate is 300 pesos to the dollar. I keep pointing this out. So I think what some people just want to find something skeptical or critical to say, but so our shareholders can multiply the price of Bitcoin times that, and if Bitcoin moves up $1,000, they know we added $130 million worth of value. So that's not that hard. But if you were a company and 5% of your enterprise value was Bitcoin, or 2%, or take Tesla, they would have taken a massive intangible write-down and gotten all the negative optics, but it would still be immaterial to the rest of their P&L or to the rest of their enterprise value. So it's like all the downside, not so much upside. Whereas in our case, our shareholders will look at that and they can do their own calculations. So we don't necessarily suffer from an indefinite intangible non-cash charge. So I think that you will have to see some changes before you see big corporate adoption there. I think there's still a lot of unregistered securities in the crypto ecosystem. And it's undoubted that Bitcoin is cross-collateralized against some of those unregistered securities. And there's more regulation coming to anyone that's in this space, more clarity. So I think the worst of it is behind us, but I don't think that the industry has been clarified or completely rationalized yet. I think that there's thousands and thousands of cryptos that need to disappear. Right, I think there's a 99% rationalization rate that needs to happen, and so I just think we went through an pretty important deleveraging, and I think the people will be much more careful in the way they view things going forward than they were a couple of years ago. I think we were in a Wild West stage the first decade of the industry, and I think we need to grow. We need adult supervision in the industry, and there's an entire generation of people that need to understand counterparty risk and basic risk management, and they also need to understand the difference between a security and a commodity. And with all due respect, there's still a lot of people that don't really understand the ethical or legal difference between a security and a commodity.
The one thing that I think, just moving forward into the future, that people should keep an eye on is everything you think you know about NFTs is nothing. NFTs are basically a unique contract. People use these terms without understanding what that means.
That's exactly right.
An NFT is an unlock for everything from plane tickets to hotel rooms, from concert tickets to insurance policies.
Memberships, everything, yeah.
Everything. And people just still are hooked on what they saw at first, which is artwork and communities.
Yeah.
For debasement, and it didn't work for inflation. Yeah. You're like, really? And you're still going to worship this one?
Buddy.
And the big wave, I think, in the terms that we think of in terms of financial market access is, I think you're also right. I think a lot of people would not put Bitcoin and ETH on their balance sheet, figure out custody, all of that. They all did VC. They've done that. Mm-hmm. VC is now expensive. It's illiquid for a period of time, but they got them their toes in the water. The next thing is going to happen is the hedge fund space. And what's super interesting to me, there's $4 billion in the digital asset hedge fund industry. It accounts for a small fraction of the market cap. And that means that the secondary market liquidity is minuscule because players like 3AC, frankly, nobody's, were the biggest lending provider. There is no secondary market liquidity. $4 billion versus a $3 trillion hedge fund industry.
We've been in a recession since March of 2020. If you calculated or if you estimated the economy based upon real output and then you adjusted it for the strength of the currency, if the currency loses 20% of its purchasing power and the economy is flat, then you contracted the economy by 20%. So the currency's lost 40% of its purchasing power in the past 2 years. If the economy grew 5%, you're down 35%. So yeah, we're in a recession, but I'm not a macroeconomist, and I don't really care to engage in the debate about what is the definition of a recession or not. Right, it's above my pay grade. So the only thing that keeps people from swapping all their local currencies for dollars is whether they trust Tether, or whether they can get access to Tether or Circle, right? Right, because UST wasn't a trustworthy dollar, right? And maybe you can't get access. But I think that there's no doubt if you're looking at your bank freezing your assets and devaluing your assets in local currency, you want to hold the US dollar as your medium of exchange. And you want a simple world, or a simple way to see the world. If you need your money in less than 4 years, you probably want to keep it in the dollar. And if you need your money in more than 4 years, if you want to hold it between 4 and 40 years, you put it in property. And the best property in the world is Bitcoin, and the best currency in the world is the dollar. And there are weaker properties like an Airbnb or building or stock, and they're weaker because they've got counterparty risk, and they've got tax risk and execution risk and competitive risk. And maybe they're not so portable. You can't really move a ranch out of Zimbabwe to San Francisco when you have to flee the country. So what can you move out of Africa to San Francisco when you want to flee the country, right? Bitcoin you can move, and the rest, unclear.
I think there is obviously, the market could go down to new lows, the market could trade sideways, the market could grind higher, or the market could V-shape. For me, the highest probability is the V-shape. And I know that sounds like hopium, but I'm doing it by looking at every participant and their pain points. Now, could be wrong, but only one of those is a new low. So why do I care? Secondly, we're at everybody's got their own favorite analysis for this, whether you're using the weekly RSI or whether you're using the 60-month exponential moving average or whether you're using the logarithmic channel. Right, we're record oversold. We're right at the levels. Whether we go down 50% from here or we don't, the upside is 10 to 20x on the entire market cap. This is like the best opportunity you're ever going to be given. And people are thinking over the price, was it going to go to a new low? I'm like, you're crazy, guys. This is